Hello and welcome to another update video about LINK. Yeah, what can I say? LINK is still moving in a broader range, really painful price action, very much corrective, clearly corrective price action. LINK loves to do these corrective structures. It's worth noting that this pattern here that we are dealing with right now looks actually very similar to this pattern here, this section, okay? So you get your corrective structure here, yeah? And I mean, it's possible that we get another extension higher because it just doesn't follow through to the downside clearly, but there is no clear setup for it. Okay, there is no clear setup for one more upside extension. It's of course possible, but I just don't see the clear pathway. I mean, there are counts I can share with you, but there's just not the high confidence scenario that would tell me, okay, we get one more high. I mean, until we've arrived here, I highlighted to you, we get one more high, and we wanted to see further upside from here. We wanted to see further upside from here. Now it's more like, okay, it's not here. It was, we should get one more high. We should get at least one more high or more. Now it's, okay, we could, okay, but we're not here for the could, we're here for the should. And what we talk about probabilities and everything, and it is just more probable that we are in wave 2. Now, sometimes the market takes the lower probability path, right? And that would be a move to the upside, another extension. So for me, at the moment, it's more probable that we follow through to the downside and we do this C wave, right? Since I've highlighted that we probably topped, we haven't seen any impulsive price action to the upside. Just choppy sideways action, actually. 3 wave rallies, yeah, lower highs. But what I'm missing at the moment is a lower low. We just don't see it. And I need to see some more follow through to the downside to really get more confident that indeed this wave 2 is unfolding. I'm leaning to that idea, yeah. I'm leaning to the idea, but we need it further confirmed, yeah. We need constant information from the market which validates this scenario. And how can we get that? Well, I need to see a break below this swing low that was formed on the 20th of March next. I'm going to the 1 hour chart now. So this is what we need to see. We need to see a break below this low. This level needs to break, and I'm going to add a little arrow there. So that level needs to break for further downside follow through to basically tell us, okay, with high likelihood, wave C to the downside is now unfolding. It depends on which count we follow here. There's the white count, which is an ABC, or the yellow count, which is a WXY. And there are many. See, this could still extend into a more complex B wave, for example. That's possible. Okay, there's absolutely nothing that would stop this from happening. So an A wave up, the B wave down, and then a C wave up, and then we do this, yeah. That can happen. It is also possible that in the yellow count, obviously it's a WXY structure, and this here is then an A, B, and we could follow through in wave C. But even here, that B wave could extend a bit into a broader flat. A wave down, then A, B, C in wave B, and then we come down. So just be aware of that, you know. But until we see a clean 1-2 setup to the upside, I cannot confirm that a low is in place, and probabilities would dictate that we get one more low. Now, in an alternative scenario, if we see the upside follow through and if we see some impulsive price action to the upside, we can take one more extension higher. Seriously, at the moment, I mean, I do take it seriously that we could go higher from here, which can happen. I mean, but then I would say this is only valid as long as we hold below this low from the 20th of March. Now, if you want to prepare, it's very simple. I mean, of course, it could go up or down. It should go down. It could go up. If you want to play the upside scenario, there's a very clear invalidation point I mentioned to you, which is the 20th of March low. So if you want to trade for one more extension to round about $25, there is an amazing reward to risk ratio. I mean, think about that. Just even if it only goes to, I don't know, $24, and you set a stop below the, what is that? Stop below the 20th of March low. There you go. You have a reward to risk ratio of 7. So it's it's always a question of reward and risk. So if we talk about, okay, an alternative scenario would obviously be this extension, Alt1. Yeah. Sometimes it makes sense to trade the alternative count. It can make sense because we're not trading probabilities. Well, at least not directly. We're trading reward and risk, right? So for example, there is no trade in the yellow count here at the moment, but there might be one in the white count. There's no count in the yellow one. I don't see one. Down here there is, to scale into support. Yeah. But at the moment, if we get one more extension in the Alt1, and maybe I'll highlight that in green. Okay, so that there might be a trade there. Is it a high probability trade? No. Is it a great reward and risk trade? Yeah, actually it is. So that's just something to be aware of. Don't forget, if you do that it could simply, any rally could simply be a B wave or this B wave. So regular profit taking as the market makes it available might make sense. Until we see that upside though, I'm primarily looking for a move down, but it needs to be confirmed with a break below the red line. That's my update about Link. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Also make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye bye.